Over the past year, Bandhan Small Cap Fund's asset under management have more than doubled. They rose from about 4,900 crores in May 2024 to around 11,700 crores by May 2025. Now, for a fund launched just 5 years ago, this level of growth is both striking and uncommon. Now, this rapid rise in AUM has a reason. As you would have guessed by now, the reason is its performance. The fund has consistently outperformed both the benchmark and category average. The scheme currently tops the charts when you examine the performance of small cap funds for the past 3 years. It has delivered 34% returns to investors, and it's the third best performing fund in the past 5 years, delivering over 40% returns. Now, for a young fund to capture the market's attention so decisively raises critical questions. First, has this fund been a consistent performer since its launch 5 years ago, or the returns look attractive due to one-off gains? Can it continue to outperform other funds? How has the performance been during market ups and downs? What are the reasons for its outperformance? Was it due to some aggressive bets, or does it follow some sound risk management? These are the questions that we'll try to answer in this video. Hello and welcome to ET Money's YouTube channel. In today's video, we will closely examine the Bandhan Small Cap Fund's growth, its portfolio approach, and whether the recent performance reflects a consistent investment discipline or a favorable market cycle. But before we begin, a quick reminder. The funds we discuss in our videos are not our recommendations. The idea is to help you understand a fund better so you can make an informed decision. Please do your own research before investing. Alright, so let's begin by getting to know the fund a little better. Bandhan Small Cap Fund was launched on 25th February 2020 as IDFC Emerging Businesses Fund. In April 2022, IDFC Asset Management Company was acquired by Bandhan. Post the acquisition, the IDFC Mutual Fund was renamed Bandhan Mutual Fund in March 2023. Now in November 2023, the Bandhan Emerging Businesses Fund was renamed once again to the Bandhan Small Cap Fund. Now, despite its short operating history, the fund has managed to build a strong presence and garner considerable investor attention. At the time of its launch, the fund was managed by Mr. Anu Bhaskar, the then head of equities in IDFC Mutual Fund. He managed the fund until early 2023. Now, after his exit in January 2023, Manish Gunwani joined Bandhan Mutual Fund as a head of equities and took over this fund. Now, before joining Bandhan Mutual Fund, Gunwani was the chief investment officer at Nippon India Mutual Fund. He is an industry veteran with over 25 years of experience. Kirti Jain subsequently joined Gunwani in June 2023 and Harsh Bhatia in February 2024, forming a trio that now jointly oversees the fund's portfolio. Now, as mentioned earlier, the fund size has more than doubled in just the past year. But is this stellar growth driven solely by recent success, or has the fund consistently outperformed since its inception? Let's examine the fund's performance across various periods to get answers. Since this fund was launched only 5 years ago in 2020, there isn't enough data to assess its long-term rolling returns, a key measure for evaluating performance consistency over extended periods. However, to understand whether the fund has been a reliable performer within its relatively short history, we analyze its annual returns. We compared the Bandhan Small Cap Fund's annual performance with that of its benchmark and the category average. Now, last calendar year, the fund had 45% returns. This was quite an outperformance. Both the benchmark and the category average returns were around 27%. In fact, except 2021 and 2022, the fund has consistently outperformed its benchmark and its peer group in each calendar year since its inception. Now, what's particularly interesting is the fund's performance gained strong momentum after 2023, the year Manish Gunwani took over. His expertise has clearly shaped the trajectory of the fund. Now, calendar year returns indicate that the fund has an impressive track record over the past 5 years. However, what stands out is the fund's ability to capitalize on market rallies. Now, to analyze this, we examined the fund's up capture ratio. The fund's up capture ratio stands at 105.5, which means that for every 100-point rise in the benchmark index, the fund tends to gain approximately 105 points. The fund's up capture ratio is way higher than the category average of 86.17. This indicates the fund's strong participation in upward market movement. That said, it is important to view this data with some caution. Given the fund's young history, the absence of long-term performance across cycle means we do not yet have a complete picture. So, the fund has a decent performance when the markets rise, but what about performance when the markets turn volatile? How well does the fund manage to limit losses during challenging periods? Let's now explore how effectively Bandhan Small Cap Fund has cushioned the downside. Since the Bandhan Small Cap Fund's inception in February 2020, there have been 6 occasions when the Nifty Small Cap 250 TRA index registered a sharp decline of over 5%. On all the 6 occasions, the Bandhan Small Cap Fund managed to limit losses better than the benchmark. Let's start with the recent market fall earlier this year. In February, when markets fell by over 12%, the fund fell by 11%. In January, while markets corrected by over 10%, the fund fell by just 8.7%. Now moving to the most striking fall in March 2020, when markets faced extreme volatility due to COVID-19 crisis. While the benchmark index plunged by 33% that month, the Bandhan Small Cap Fund limited its decline to just 11%. Now another notable instance was in June 2022, when the index dropped by 6%. During the same period, the fund's decline was contained to just 3%. Nearly half of the benchmark's fall. Now, this ability to protect capital during market corrections is reflected in the fund's downside capture ratio of 77.1, which is in line with the category average of 77.5. Simply put, for every 100-point fall in the index, the fund typically declines by just 77 points. Now, that's quite a remarkable outcome for a small cap fund. The category is generally considered more volatile. Now, going by numbers, 13 out of 31 funds in the category hold a higher downside capture ratio than the category average, indicating the investments lost more. So how has this young fund consistently performed well and managed risk effectively? In the next section of the video, we will explore the investment approach, the fund manager's strategy, and what exactly is working for the Bandhan Small Cap Fund. So what's driving the young fund's exceptional performance? Let's take a closer look at the investment strategy. Now, according to SEBI regulations, small cap funds are required to invest at least 65% of their assets in small cap companies. By definition, these are companies ranked 251 and above in terms of the market capitalization. Now, Bandhan Small Cap Fund typically maintains about 72% of its portfolio in small cap stocks, which is broadly in line with the category average. However, what sets this fund apart is where it chooses to find these small cap opportunities. Now, most small cap funds tend to focus heavily on stocks ranked between 251 and 500, essentially companies that form the Nifty Small Cap 250 index. This is considered a relatively safer hunting ground within the small cap space. But Bandhan Small Cap Fund goes further. It actively looks beyond the top 500 listed companies. In fact, as of April 2025, out of the fund's 184 holdings, as many as 97 companies are not part of the Nifty 500 universe. Now, is this approach risky? Absolutely. But this is also where early stage high growth opportunities may lie. Analysts don't track this space extensively. However, these companies have the potential to deliver significant upside if selected carefully. Now, even the fund's top holdings reflect this unconventional strategy. Take a look at the top 10 holdings on your screen. Interestingly, 3 of them, the South Indian Bank, Arvind, and Yatharth Hospital and Trauma Care, are not part of the Nifty 500 universe. Now, this offbeat selection may raise eyebrows, but it also signals a deliberate, high conviction approach to spotting potential winners long before they become mainstream. Now, speaking of high conviction, the fund's portfolio turnover ratio offers additional perspective. The portfolio turnover ratio measures the frequency with which a fund buys and sells securities within a year. A higher ratio suggests more active trading, while a lower ratio indicates a preference for a buy and hold strategy. Now, as of May 2025, Bandhan Small Cap Fund reported a turnover ratio of 45%. This means that nearly half of the portfolio was reshuffled over the past year. Now, if you look at the chart on your screen, you will realize that the portfolio turnover ratio has been on a downward trajectory since February last year. The current levels of the turnover ratio indicate a moderately active approach. It shows that the fund manager strikes a balance between conviction in stock selection and periodic adjustments to manage risk and capitalize on emerging opportunities. However, when a fund focuses on small-sized companies, liquidity becomes a critical consideration. Shares of small companies may not always trade in large volumes. Buying and selling them swiftly can be challenging, especially during volatile market phases. Now, to navigate this, the fund managers have significantly expanded the breadth of the portfolio. In the next section of the video, let's explore how the fund managers handle liquidity. To effectively address the liquidity challenges, the fund managers of Bandhan Small Cap Fund have strategically expanded the breadth of the portfolio. Now, back in December 2022, just before Manish Gunwani took over as the lead fund manager, the scheme held a relatively concentrated portfolio of around 60 stocks. By March 2025, this number had grown significantly to over 180 stocks. Now, with such a large number of stocks, the allocation to individual companies is deliberately kept minimal. Only 18 stocks have a portfolio weight of more than 1% each. A significant portion of the holdings, as many as 127 stocks, carry an exposure of less than 0.5% each. The bottom 100 stocks together account for just 17.88% of the total portfolio. This reflects a deliberate effort to diversify across a broad range of companies while carefully managing concentration and liquidity risks. Now, this portfolio structure, where a large number of holdings have smaller individual allocations, enables the fund to remain nimble in the small cap space. Now, we've seen a similar strategy play out successfully in other funds such as Nippon India Small Cap Fund as well. Now, this over-diversified portfolio may help the fund navigate market volatility and liquidity constraints while maintaining a meaningful exposure to growth opportunities. Another notable risk management tool that fund managers use is keeping cash in the portfolio. The Bandhan Small Cap Fund relatively has a higher cash allocation. Now, as of May 2025, the fund held approximately 13% of its assets in cash, significantly higher than the small cap category average of about 7.5%. For context, only 6 small cap funds maintain cash levels above 10%. This elevated cash position suggests a deliberate strategy to preserve liquidity and wait patiently for more favorable investment opportunities. It reflects Manish Gunwani's measured approach to managing the fund, a clear philosophy of prioritizing risk management over aggressive chasing of returns. The large number of stocks and the strategic cash cushion together showcase this cautious yet opportunistic stance. Now, this conservative approach is also visible in the fund's valuations. The portfolio's price to earnings ratio stood at 39.06 in May 2025, which is well below the small cap category average of 45.6. Now, other valuation metrics such as price to book ratio also indicate a similar pattern. So, it is clear that the fund management remains focused on maintaining a margin of safety while aiming to deliver outperformance. Now, all this leads us to the big question: should you consider investing in this fund? This fund has consistently made a mark in a relatively short span of time. Its rapid growth in assets, consistent outperformance, strong downside protection, and a well-diversified, broad-based portfolio all paint the picture of a fund that is both ambitious and cautious. However, it's essential to remember that this fund is still relatively young, having only been established 5 years ago. That means we don't yet have the long-term data across full market cycles to completely assess its resilience. This is a crucial piece that long-term investors should factor in. That said, past performance, while not a guarantee of future returns, can still offer meaningful clues. It provides us with an understanding of how fund managers think, how they handle risk, and how the fund is likely to behave across various market situations. In the case of Bandhan Small Cap Fund, the fund's consistent investment discipline, focus on managing liquidity, and valuation-conscious approach offers some comfort. And with this, we have come to the end of this video. I hope you liked this video, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.